people always ask me, when will the reset happen? I always tell them, we're in the reset now. This is a process.
A warm welcome to viewers catching this session of Assay TV. I'm catching up with Willem Middelkoop, who is chairman of Commodity Discovery Fund and a long-term investor in mining as well as other sectors, and something of a pioneer in early stage investing, which we'll be talking about. So Willem, it's a pleasure to be speaking with you again.
Yeah, great to see you again, and I hope we can meet in person because it has been a while, Adam.
Yes, indeed. Lots of virtual catch-ups getting us by so far. So today, I think we wanted to focus on discovery investing, and obviously your fund's quite unique in that you've been focused on the early stage discoveries, even during the bearish years after the last sort of boom bust cycle in mining. Tell us what's meant by this term discovery investments.
Yeah, I think we have a unique position because I think we're the only fund worldwide which is focusing on retail. You can enter our fund with 25K. We just analyzed it to 50K, but we have almost 2,000 high net worth investors, Dutch investors, retail investors, and that's the only fund which really focusing on the early exploration stories. And we call this strategy discovery investing, and that's a term I coined in the middle of the 2000s. I was a private investor in this space since the early 2000s. And I was attracted by a number of stories because I noticed that in my portfolio, which contained 30 precious metals, listed precious metals companies at that time, a few were doing much better than the rest. And when I started to study these companies in detail, I learned that the few outperforming companies were working on new discoveries. And especially when these companies were a little smaller, like let's say exploration companies compared to the producers, you saw a great return on the share price after they made a world-class discovery. And then I became intrigued by that. I started to work on a newsletter, which I started in 2005, a discovery newsletter, in which I tipped investors on great discovery holes. And then I was advised by a friend. He said, "You're stupid. You know, you're selling your best tips on the best discovery holes for $99. So you should start to build a fund around it." So we studied that and we built a fund in 2007, started in the summer of 2008, right at the top of the last commodity cycle. And then we experienced some very good returns in 2009, 2010. And actually, since the start of our fund, which was at the top of the last commodity cycle, so we experienced a full downturn, but we always had yearly net inflows of money. And we've had 4 years in which we had gross returns of over 70% yearly returns. And I think this strategy is now seen as a successful one.
Yep, very, very much so. Let's talk about early stage then. And, it seems apparent that the need for more exploration is there right now. Yeah. We're sort of preaching to the converted here to an extent. But the capital that seems to be going into the sector generally, compared to the last cycle, perhaps when you started your fund, it's still not quite the same. It's not the same volumes, and I don't have the figures to hand, but I've been reading around that. We have more demand and more need for mining than ever before. If we're thinking about the energy transition, if we're thinking about the state of the global macro picture, obviously it bodes well for explorers. But what's your interpretation about the sort of capital flows into the sector versus the need for exploration at the moment?
I think your analysis is right, and I think we're at a very early phase, a very early start of this new bull market.
Right.
And because it's still a very early phase, not too many people are convinced that this is real and this is the place to go to. So everybody's still in tech. You see the first phase of a move away from growth stocks to value stocks now. But you're totally right. We did some fundamental analysis in our company, supply and demand studies for the different metals. And there's a growing group of metals which are experiencing some production deficits, in which the total mine supply is in deficit if you compare that to the total physical demand for that metal. And that list of metals being in a production deficit is growing every year. So there will be a huge demand for new projects. And you're also aware that bringing a new discovery online, on stream, that takes 10 to 15 years. And we all know the amount of copper and nickel which is being needed for this energy transition. So I think as a discovery investor, the next decade will be wonderful, because our strategy, since we coined the term discovery investing, we changed the strategy a little bit. So now we concentrate, also because the fund is getting larger and larger. We're 200 million Canadian now, assets under management. So we focused on the top 100 of best breaking and ongoing discoveries. So the top 100 projects being owned by exploration and development stage companies. And we used to concentrate on the North American markets, the Canadian markets, but almost 25% of our money is now invested in Australian projects and Australian companies, because Australia is often overlooked by the North American and even European investors.
Let's hone in on that strategy a bit more. So within the 100 best discoveries, how do you filter to say, right, this is now the time we're going to make that investment? And also, you're cross commodity now. It's not just in precious metals. You're looking at some of these the upside on the technology metals as well.
Yeah, that's right. When we started the fund, we focused on precious metals only. We focused on Canada only. But now we are almost metal agnostic, because copper, nickel, cobalt, lithium, even zinc, it will all these markets will be in short supply in 1 or 2 decades. So when you make a good discovery, when you drill and you have this discovery hole, it's all about the value of the rocks. It's all about the size of the project. So we have a system, we have a database in which we check each and every discovery hole, or actually each and every drill hole. And we rate these holes, and then we end up with a top 100 of projects. And to make that list, we consider not only the quality of the drill hole, but also quality of management. What's their cash level? What's their share structure? Which jurisdiction are they in? So we give points for all of these factors, and then we end up with, let's say, the 100 best discoveries worldwide, and we decide to invest and to allocate our money in this top 100. But as you are aware of, there are thousands of projects being drilled worldwide. So you really have to do a lot of work to bring it down to this, top 100.
Absolutely. Okay. Well, let's focus in on some of your interpretations of, historically you were precious metals. Where do you think that's heading at the moment? Gold price is quite interesting given the macro risks and the inflation that we're seeing. But above 1,800 gold it's not a bad price. It's not as sensational as everyone thought, but the companies are going to make money at this price, right?
There's of course, all metals are commodities, but some of the metals are money as well, and that's important to understand. So from a monetary point of view, gold, silver are still seen as valuable assets. If you look at the fact that over 25 central banks have been buying physical gold to add to their national reserves in the last 2 years. So almost all countries east of Germany have been buying physical gold in the last 2 years. So this is telling you something, and you might be aware I'm the author of The Big Reset, which is the thesis on we need a reset of the international monetary system. Gold could be reintroduced within the monetary system. I'm not predicting we'll go back to gold standard, but the system might be gold linked again because of the huge distrust on fiat money now and huge inflation. We need to look at gold from a monetary for monetary reasons, and that's what central bankers do. So that's why we always have a strong focus on gold, because we think this will be a metal which will shine during the next monetary crisis. But gold is also a commodity, and silver, 60% of all silver is being used as a metal being used in iPhones or whatever, solar panels. So we judge each and every metal from their fundamental aspects, and if there's a monetary side, we like that as well.
Yeah, certainly. Do you think the digital currencies, or the central banks looking at digital currencies, the China with its digital yuan, or indeed Bitcoin as the sort of the predecessor to that, would hurt those aspects? Or is it more that it's not really crypto versus gold, it's more these are two alternative options to fiat, and therefore it's good to be in both? Or
I think there's a huge fight ongoing, and the fight will only increase in the next few years between the fiat money system and hard assets in general. And if we look at the monetary side, there's a huge fight between Bitcoin as the most successful form of private money, one could say. So there's a huge fight between Bitcoin and the fiat money system, and central bankers are really scared because of the success of Bitcoin being a private form of money, and they hope to bring their own central bank digital currency so they can take some of the market share of Bitcoin and other cryptocurrencies. But the more central bank digital currencies will be created by central bankers, the more people will start to flee to Bitcoin and other private forms of currency, because the central bank digital currency is just another layer on top of the fiat money system. It's just another layer of debt being built onto the system. So I think central bankers are trapped. Central bankers will need to fight Bitcoin, but they will fail because investors, the high net worth money, they understand what's going on. They understand, more and more people are understanding the fundamentals of this monetary system. And that's why Bitcoin is so successful. And especially the younger generations, I'm a boomer, you're much younger. I think your friends are highly attracted to Bitcoin and other forms of private money.
Yeah, certainly. Well, I very much, obviously, covering the mining space, see the value there, but also see the crypto thing. But I see them more as two tandems, two options to alternate, rather than sort of purely competing forces. But it's interesting. This is almost, the reset, the early stages of the reset happening. As we speak,
people always ask me, when will the reset happen? I always tell them, we're in the reset now. This is a process. It's not a binary. It's not that on a Sunday in April 2022 the reset will happen. But if we look back 10 years from now, we will say that in the last 10 to 15 years, so many things have changed within the international monetary system as well. So we are experiencing the reset. And what I find interesting, that we talk to a lot of high net worth investors. And since the start of this Corona crisis, and since the central bank really started to push all this money and liquidity into the system, they really are getting worried, you know, and with interest rates at or near zero, and many of the high net worth are looking for new and alternative investments. And crypto, and especially Bitcoin, is a very serious asset class now, is developing into a very serious asset class now. And that's quite unique. We haven't seen that in the last 100 years, development like that.
Well, let's come back to the growth of your fund then. It's the mentality of the investor that's looking at your fund. It's not really just about hedging anymore. It's not sort of owning precious metals as a hedge. This is a creative. This is adding value. This is generating capital.
Yeah, I bought out my partners around 2015, and we changed our structure a little in the last 6-7 years. And we had double-digit returns every year on average in the last 6-7 years. So I think people start to understand this is not only about hedging, this is a way to make money. And look, there aren't that many possibilities, that there aren't that many funds out there or asset classes who can deliver a double-digit return on average every year. So, and now with all the shortages developing in several of the metal markets, look what happened to palladium. There's so many, the valuations are still so low in the commodity space. I think we'll do much better in the next 10 years than in the last 10 years.
Certainly. Okay. Well, look, can we talk about some of the successes of the fund then? You know, the strategy, you know, you look for exits because they're earlier stage assets getting bought out by a bigger miner or JVs. Do you have any cases in point, examples lately, or any hot companies that are coming through?
What hasn't changed since 2007, 2008, when we started to build the fund, we always told the investors our exit strategy is very simple. We wait for the buyout. When you invest in discovery stories, exploration companies building on tier 1, tier 2 discoveries, they will always be bought out, period. We were very early investors in Noront Resources, who have a small but high quality nickel discovery in the Ring of Fire in Canada. We started to invest in that before the fund was even open. I was a private investor in 2005, 2006. There's a bidding war for Noront now, 15, 16 years later. So sometimes you have to wait. But a quality discovery will always be bought out. And our track record shows that. Our track record can be found on our website. We have had 68 buyouts in the last 12 years. Wow. We had 5 buyouts last year. So if you concentrate on the largest and most dominant discoveries, you will always do well. But we had this horrible downturn in commodity markets between 2010, 11, and 2020. So it was very difficult to show positive returns every year. But now the tide has changed, and I think the next decade will be amazing from this point of view.
Yeah, the outlook looks good, but let's just think about metal prices and then valuations. You know, metal prices have kicked on. You know, look at lithium, look at palladium, as we were talking about before, tin. Is this creating unrealistic valuations, higher valuations? Is it making your job more difficult to select the really good projects versus the hyped projects?
No, I think we're just at the perfect point in time in which you should start to invest. I'm not telling this as a salesman, but if you look at the fundamentals for metals are so strong. We are in this high inflation era, which is just starting. And if you look at the valuation, to give you an example, the 2 best zinc discoveries. Zinc is overlooked. Zinc is not sexy. Nobody is looking at zinc now. But the zinc prices are trending upwards as well. If you look at the 2 best zinc discoveries, I think it's Fireweed Zinc now and Tinka Resources. Together, they can be bought for less than 100 million. The market cap of the 2 combined is around $100 million. So these are the two most valuable new zinc discoveries. So the valuation is still so low. And we see the same in nickel. We still see the same in copper. Look at the discovery, the highly valuable discovery by SolGold and Cornerstone in Ecuador, the copper discovery, copper gold discovery. They're not highly valued. If you compare these valuations in commodities and metal stocks now to tech stocks, there's a huge disconnect. And the valuations are just getting a little better, but you're still near a 100-year low valuation compared to financial assets, for example.
Yep. Okay, excellent. And are there any projects of note within your fund that you wanted to sort of highlight or speak about at all?
Yeah, well, you might be aware that we always, every year, we hand out a discovery award. Last year, it was won by Greatland Gold. Greatland Gold has an amazing discovery in the Patterson region in Australia, 40 kilometers east of the Telfer mine, which being operated by Newcrest. This is an amazing discovery. The stock went down from its peak by almost 50%. Wow. If you look at that valuation, there's still a great entry point because it's certain for 99% that Greatland stake will be bought out by Newcrest or somebody else. So there's still a lot of value to be found, and that's one of our core positions. But we get most excited by new discoveries, and there's a wonderful new copper discovery also in Australia. It's very remarkable. The best discoveries are being made in Australia. I think Australia is underexplored compared to Canada and other parts of the world. And Carnaby Resources is working on a wonderful copper discovery, and that's something we like most. So a breaking discovery is a story we get very excited about, and then we're very active to buy our position. If we can't buy it through private placement, we buy them in the open market. And now our fund is getting larger and larger. Sometimes it's difficult to buy enough shares without sending the shares much higher.
Excellent. And yeah, you mentioned copper, I mentioned zinc as well. Are there any metals that you think are perhaps unloved or are going to perform particularly well?
I mentioned zinc. Zinc is very unloved. I think people will start to understand that zinc is an important metal. And silver. Silver, of course, we have seen this grassroots movement from the Redditors and the Wall Street web investors, understanding that silver is the only metal trading at less than 50% of its 1980 high. So silver is very undervalued. And yesterday we saw a nice move up of silver. It's January 19 today. And I think silver will do very well, but it's always difficult to say when it will start to run. But when the silver bull run starts, it could easily go up to $50 or $100 within 12 to 18 months.
It moves very fast. Okay, excellent. Well, Willem, thanks very much for sharing some insights there. It's really interesting to get an update on the fund, how it's evolved, and your thoughts on the sector.